So every time I speak to a high net worth individual or business owner and we start talking about their tax bills, one of the first 10 sentences out of their mouth ends up being, oh, well, what about real estate? I've heard there's a lot of tax benefits in real estate. And yes, there are a lot of tax benefits in real estate, particularly speaking that real estate itself is subject to depreciation, meaning you're able to take a ratable write-off over time on this, even while the property itself is appreciating. And there are strategies like cost segregation strategies that can help even further accelerate this depreciation. However, this isn't going to be a silver bullet for many taxpayers because of the passive loss activity rules that have been around since 1986. In order for real estate to generate meaningful tax benefits, most people will need to be a real estate professional and have real estate professional status, which allows them to take any real estate losses against other forms of ordinary income. Otherwise, real estate rental losses will generally be categorized as passive losses. A popular strategy that people have been using for the past few years has been what's called the short-term rental loophole, wherein if you have rentals that are less than 7 days in average length, think an Airbnb or a similar operation, then those don't fall under the passive limitation losses that we were talking about. This, to me, has always been a questionable strategy because it also does require material participation in this, which can be very hard for many high wage earners or business owners to put the amount of time in there. And I have questions in regard to the asset utilization and valuations being used that this violates one of my cardinal rules of tax overall about you don't want to spend $1 to save 50 cents, meaning going out and buying a short-term rental that you're not sure you're going to be able to rent or not is not necessarily a great strategy overall. And a lot of people don't want to be landlords. So you want to make sure it fits into your overall strategy, but also to realize that a lot of the hype around real estate as this tax silver bullet is more misunderstanding or thinking about pre 1986 rules.